All right, good day, people. So today we're going over Safe. Currently, it is 163 on Coin Market Cap ranking at 53 cent right now. Market cap of 307 million. Remember, market cap really doesn't matter too much when it comes to crypto, although that is an equities market type of metrics. But when you're dealing with crypto, it's a little different. We got a total supply of 1 billion. All right, right now we got 11,000 holders of this particular project. Safe is a unique project. Let's get to it. So let's go over to the website. So with this, it's got smart accounts to own the internet. And what they're doing is they're trying to move the world's GDP on chain, which is a huge undertaking if you think about it. So that's basically all the real world assets and all that stuff moved on chain. All right. Um, what I want to go to is I wanted to focus on um, this part here. Let's get to it. We'll go to, bear with me. I want to say it's right here. Let's go right in here. All right. So when we look at Safenet, it's a groundbreaking transaction processor network from the Safe Ecosystem Foundation. All right, so it says designed to scale decentralized finance and move the $100 trillion global economy on chain by solving liquidity and fragmentation and enabling instant and secure cross chain transactions. Now, here is what I really want you to focus on. All right, SafeNet is not a blockchain or layer two. It's a transaction processor network. I want you to fully focus on this. All right. If we are to be investors, we really need to look at disruptive technologies. All right. Blockchain is a disruptive technology. However, there are other what we call distributed ledger technologies, DLT, all right, out there. This is important. And you're going to notice that this is why I have Hedera hash graph up here. It's because Hedera is not blockchain. It uses a hash graph technology, which is also a DLT. IOTA is another type of DLT. All right. And if we go down here and we'll look, it tells you, let's see, all right, where you at? They use DAG, right? So it's a directed acyclic graph. They call theirs Tangle. Okay. So it is, IOTA is a distributed ledger technology. So it's different from your unique, blockchains that we see. So Safe is also in that realm. What does that mean? It means that they're creating something that somewhat competes with the blockchains. They consider themselves to have better uh, upgradable technology that's going to basically adapt to the needs of the world because there are limitations when it comes to certain blockchains. We love Bitcoin. Bitcoin is the father of all when it comes to the first true application built on a blockchain, which is a financial application at that. What people don't realize is there's multiple types of applications that you can build on, and this is why you have different types of crypto projects out there to begin with. A lot of people talk about altcoins as being lesser than. Well, that's not really truly the case. A lot of them are upgrades of what Bitcoin wasn't able to do, which is the scalability, the processing speed. It was too congested, it was too slow. So a lot of other crypto projects begin to solve those problems, begin to expand its scope of what blockchain can be. Then you have smart contracts to come about. All right. And then you have the AI infrastructures coming in. We have AI agents, and you can do it's so much you can do, right? But Safe is now or SafeNet, like I said, they're looking at its transaction processor network. And that is what I'm focused on, that network and building that. All right. So they want to be able to, connect with the future chain, on chain and off chain, like Visa and CEX and centralized exchanges. All right, the core components of Safenet are processors and a liquidity network. I love the idea of they're trying to solve that problem with the liquidity aspect. So it unbundles transactions, execution, and settlement, bringing execution guarantees to on-chain transactions. All right, and the fact that they're going off of a $100 trillion ecosystem, that is great. All right, we need that. Okay, all right. So it has grown into a leading smart account ecosystem, securing approximately 69 billion in total value across more than 11 million accounts. So within the last 12 months, over 150 billion in transfer volume, also known as total volume process, originated from Safe. All right, so this is comparable to 0.6% of the world's GDP. Now, if it's 0.16% of the world's GDP, that means we have a lot of upside growth. Imagine if this project can get to 2%. We're cooking. All right, so you got projects like Polymarket, World App, and 200 plus other builders rely on Safe smart accounts to provide secure, self custodial wallets with seamless Web 2 Lite user experiences. All right. So, once again, I love their vision. The vision is to move the world's GDP on chain. So, once again, at Safe, we think that the potential blockchains extend beyond bean coin, casinos, or airdrop farms. All right. So, blockchains have a real shot at becoming a global settlement layer for our societies coordinate, transact, and bring the worlds closer together. All right. So to achieve this vision, the goal is clear: move the entire world's economy on chain. I love the idea. Now, it talks about it. They have challenges. So with this particular project, still is not in the clear that everything's going to be peaches and cream. They still have work to do. But I like the direction. I love the problem that it's trying to solve. Fragmentation. All right, they got different layer ones, two solutions, created isolated ecosystems, and blockchains are not sufficiently integrated with off-chain financial networks. I love it. You're correct. You got latency. All right, cross-chain transactions suffer from delays due to bridging block times. So they're looking to correct all these uh, issues that we have. And anybody who knows, it's getting a lot better with bridging, with moving from one asset out into another. But a lot of us who may watch this video, we could be homeowners. We could be, what does it look like to be able to take tokenized real estate, tokenized asset, real world assets, bringing it online into an ecosystem, and then now we can seamlessly move in and out and transact and can communicate at speed. That's the greatness of it. All right, so let's look at the ecosystem. Let's see what's going on over here in the ecosystem. So they got some of these that's in the ecosystem. They got a DeFi focused custody solution that leverages multi signature and multi party. Let's see. All right, so you got the most complete custody and wallet platform. So you can manage all your digital assets with confidence. a unified platform offering a custodian and MPC wallets. So you got this, and it's going to also help with security as well too, guys. So you definitely want that. Um, got NFTs built in, and these are some of the other networks that we know, like Arbitrum, Aerodome. These are a lot of these are automatic market makers. All right, so you need that as well too to add liquidity. So I'm not gonna go through all of these. Let's see, you got payments. So you got base app issues a Visa debit card that taps onto funds held on a safe platform. So you can spend crypto at 70 plus million merchants worldwide. So you see the infrastructure of being able to build through this. So these are the projects as well. Right. And this is what we want to see. We want to see what we call use cases. All right. This is a use case or utility, as we say. All right. Got utility. See what else going on. So it says access your assets on any network. So you got cross chain interactions are simplified. Say goodbye to gas fees, hassles, and enjoy a seamless, stress free experience. So you got speed, you got security, execution guarantees, unified balances, spend from a single balance across all chains off chain. That's just pretty good. All right. So if you got, I don't know, let's say you got 13 different crypto projects. And out of the crypto projects, you gotta understand. I just said crypto, but people gotta understand cryptocurrency and a token is not the same. They're not. All right. And then you got DAOs. All right. And then you got autonomous agents. You got all these different types, representations. And then what if you got a tokenized asset? But what if you want to spend? How do you do that? So a unified balance, that's pretty good. Let's see what else we got. All right, we got this vision. We already went through some of this. All right, we can look at how does it work. All right, let's see. All right, so you can execute transactions using external liquidity, achieving instant execution, provide execution guarantees, including security checks and user-defined policies. Use validity proofs to settle transactions on a user account. So it's underpinning. This is the Safenet liquidity network. This liquidity network enables processors to providing the required liquidity to execute transaction intents. And you also can be involved in one of their DAO programs as well too. So you basically it's like a staking program. You can stake your safe in to help provide this liquidity as well. So they got the SafeNet processor economy. So it is saying it's more than just a solution to the network fragmentation. It's designed to enable an economy of different application specific processes. These can range from unique transaction guarantees to connecting the user to a balance to new networks and even off-chain services, cards, centralized exchanges, will bring the peace of mind of functionality and custodial service, but with the control of self-custody. So you see all these different types of ecosystems where all these bubbles are all connecting to the main thing. So you got security, card, AI, loans, rules, credit, wallet, emergency, subscription, rebalancing. I like it. So look at these loans. User may be able to acquire an NFT with only a partial down payment with the help of a lender, with a processor guaranteeing the NFT being locked on the account and transferred to the lender if the interest of the loan is not paid. So this is another form of sophisticating financing. All right. You got subscriptions to service commit to monthly payments that get triggered periodically by the processor. So much, right? So this is the beauty of the evolution of this decentralized network of what we're dealing with in the the blockchain space and now this particular distributed ledger technology space. All right, remember we talked about staking got validated, so you must also stake to prevent DDoS attacks. So I like Safe Tools because this is a form of cybersecurity built into this as well too. So you definitely want to make sure you don't have no DDoS attacks because that is very dangerous if that happens. Okay, so cybersecurity is a must, it's a plus, and the fact that this project also is dealing with cybersecurity as well, it's really good. So they got some of the roadmap Q2, all right, Q3 and 4, open liquidity network. So some of these have not fully been developed yet, still in the works. But if there's something that we're going to be invested, I do not own any safe right now, but I'm very highly interested in this particular project. Now let's go look at some trading metrics on this particular thing. First, let's go look at we're over here on CoinGlass. We're going to go down here to the liquidations, and we're going to go to safe. Right, and we're gonna look at some stuff. Let's start with 24 hour. Right, 24 hours. We had 92% that have been long, which means suggests that this probably is getting destroyed. With shorts, bears are probably in control. Based off this, go look at the full chart. On the 5 minute, let's go down to the hourly to get rid of some noise. All right, and stretch this out. Let's bring this down over here. All right. Okay, here we go. So for the last 24 hours, all right, so it's Saturday. So right now it's 1:57 p.m. So let's go to Saturday at the time. All right. So in the last 24 hours, 92% were long. In the last hour, 100% are long. In the last 4 hours, we had 99%. So majority are long, and you see that we are in a down trend. Well, we got some bearish movement. We also broke above the previous day high. All right, and now we came back in within range. So this was probably a liquidity sweep for the most part, where it trapped some of these bulls, and now they just got liquidated. Uh, all right, so we see that on this side for short-term price action. All right, so looking for some more liquidations on that part. If these longs stay too long, we're definitely going to see some more downside pressure to come back down. All right, we got some. We got the Bitcoin conference that is coming next week, I believe on the 27th. All right. So we definitely typically see price action in the crypto market to go to the downside after the conference. We see a little strength, which we did this week. We saw strength going into the conference for this week. All right. And now we should see some sell off coming. So with this project, we still can see some downside pressure come down. Let me go up to a higher time frame and see exactly where we could. It seems like we're already in the suppress. I like the fact that we're at a bottom uh, basin of this project. This project is essentially since April has been in the downtrend to the downside, trying to fight to get back up. But this clearly shows me too is that so a lot of crypto projects don't have um, lockup periods. So in the equities market, a lot of the insiders aren't able to sell off their positions because they got to go through a lockup period, and this is to protect the price because insiders can control a large amount and they can dump it and it can affect price. Well, crypto don't fall in that category, and so they can go live and boom, it can start dropping. And we need to see when was this probably added on Coinbase, which is on Coinbase. And typically Coinbase becomes a dumping ground for a lot of new projects, or once they get on Coinbase, because now they have the liquidity to sell to more people, and those sell pressures become more, and it just pushes price down. So we've already seen this thing drop essentially 87% all the way up to this level down here. So 87% is dropped. So it's technically on a discount. So what does that mean for us? We are in what we call an accumulation zone. This is the whole entire accumulation zone. So for me, anytime price is in this area, I would like to accumulate as much as possible. Okay. Now, what we're gonna have to do is I'm gonna have to reverse engineer this thing, um, based off of this impulse going down. What we're gonna have to do is I can give you where our extension points have based off the fibs. All right, we can take it to here, and this is what we're gonna do. We see that our targets have been hit. So what I did was I took this measurement impulse down. All right, this level, first level hit, and we get close to the second one. It did not get hit yet. Now, there is a possibility if we see some bearish pressure come in over the summer, we could go down to the 30 cent mark. Regardless, this is our entire accumulation zone. So we would just keep accumulating as long as we're within this zone. All right. Now, I'm gonna have to reverse this, and what we're gonna do is I'm gonna measure this, and this is gonna help see if we can get a potential upside target based off of this. And essentially, I first ordered a business to get to $2.25, then to $2.69, and then to $3.98, $5.28, and $6, based off of this particular impulse that we have right here. And I can do the other type of inversions where we flip this. So I can take this whole thing right here, even though this is an impulse to the downside, I can reverse it, and I can act as if it's to the upside. And this is where we possibly could see as well, is that the first order of business, our first target would be $3.31, $4.04, $6.14, $8.23, and then $9.53 if that were to happen. All right. So keep in mind that, you know, it's not financial advice, it's just a forecasting. I don't know if it's going to do that or not. However, what I do know is that it is in a zone of where it's at a discount. All right. So in this zone, we already seen that we have seen price find some footing and push out. So we done had a 145% gain out of that level before. We've also had from here to here, we had a 68% gain. So you see that we're finding some footing here. Also, when we was in here, there was a accumulation zone as well, and from there we did a 194. From here, we did a 91%. So there's some buying pressure coming in, and so this basin is pulling up, which we could see that we can start fighting back up here. But I like that if we use the times two method, meaning that if it's at 53 cent, we'll go ahead and times that by two. And once we times that by two, that gives us the level of which we need to accumulate as long as it doesn't surpass that. Okay. So let's see. So as long as price is below $1.06, which right in this area right here, we will be accumulating. Now, for me, if I want to get into this project, so essentially saying I do a times two method, meaning that if it's at 53 cents, you times it times two. 106 is that you will invest in this as long as it is under there. You just put on weekly, bi-weekly, whatever you need to do. If it goes lower, good. You just continue accumulating until it passes this, then you stop. Now, you can adjust. You can do a times three, you can do a times four, or you can do any number. You can say, hey, Once this asset gets to $1.50, I no longer would buy. If you want to say $2, whatever the case may be, so the times two method is just a foundational starting point. It's not a written in stone that you got to do that, right? So that's one of the strategies that we use. Okay, some of you are new. You join the academy. We talk about all the research, the analysis, the strategies. Some of you who aren't involved are new to this channel. You can check it out there. Um, so when I mention the times two method, you'll understand exactly what it is that we're talking about when it comes to that. All right. So yeah, check out Safe. Um, I think it's a unique project. Okay. Let me know your thoughts and everything about it. Take a look at it. Go do some more research and look at some of the news that's about. And also, I got yield. All right, so you got some yield. I got a net APY of 35%. That's on a centralized exchange. So you got to understand too is that when those yields are high, it's probably a little too extreme for me. But needless to say, when you understand how these dials work, you're gonna start seeing that a lot of big corporations, institutions are gonna try to gobble up because now they can make money through the dial, through the staking process, and they can generate yield. And so I want some of you guys to start thinking more strategic like that for your family and say, hey, what is the yield for my family? All right. So a lot of these assets are being gobbled up at some of these suppressed state prices so that they can hold on to these and benefit from the yield from the coming years. Okay. So think about that. Look at this down here. You got Safe Dow Treasury, it's 41% allocation. The Gnosis Dow, 15%. All right. So really start paying attention to these dials. Okay. All right. And then we really want to see these holders start to increase too. So we're seeing it. We did see an increase in the last 30 days. Let's see what it's talking about over the year. I don't know if it goes all the way back uh, for the year. So we got limited data on here. Okay. Um, Now, whoever this number one top holder in this wallet right here, they got 457 million safe. It's worth $243 million, and they have 45%. So this is a big whale. So whoever this person is a big whale. Okay. All right. So the top 10 owns 81%. Now that goes back to this. Remember this price. All right. Look, top 10 owns 81%. What were they doing here? Unloading. Unloading. They're they are these are realized profits that they're taking and selling. Okay. Here's where I I like this and even lower is because it gives me advantage. I'm not buying from you whales up here. I'm not buying up here. I'm not buying up here. I'm sorry, but I'll take the discount down here. Okay. It's because I know that if 81% is controlled by the top 10%, all they have to do is just put in one massive little order is going to prop it up. And the average person, they're going to come in, they're going to start buying at $1.50, $2, $3, and so forth. Okay. So we want to play the game a little bit totally different than everybody else. All right. I have to go on and see if, say, let's go to Blowfin. Let's see if this is where we got the futures. All right. Let's see if they are safe is traded on here. And we really want to know that because it changes the game or how you want to play this. And it is. All right. So they're contracts. Okay. This changes the game. This is great too. So in my strategy, okay, I may play more instead of accumulating as a long-term investor. I may be looking to play the leverage game with Safe. Okay, it's in a basin. Like I said down here, if we go lower, great. I will be positioning myself, and I will use leverage to trade this. So there you go. All right. We can trade this using leverage. I'm a big fan of leverage now, as I've begun to really hone in on trading. All right, I've been an investor for so long. Trading has opened up and allowed me to utilize certain skill sets as a contrarian, and it's been working. All right, so that's it. Hit the like button, subscribe. This your boy E Way. I'm out.